Okay. In today's session, we'll discuss about purchasing process and the sales process. Means the purchasing process means here we'll be discussing where actual purchasing process starts, where it ends. That means end-to-end process means complete process. The same way, the sales process also will understand, because if you want to work on the financials, you should aware of this complete cycle, so that whatever we are going to do in the financial application, there will be more meaning for the each and every transaction which we'll discuss. We know, like, without, so we'll get all inputs from purchasing only, right? So when we are going to work on payables, okay, we should aware of purchasing. And the same way, when you are going to work on receivables application, we should aware of sales process. Because of sales process only, we'll just have a transactions in receivables. So there is separate naming convention for this purchasing process and sales process. That also we'll discuss what is the naming convention we have. First, we'll try to understand very standard purchasing process in any organization. Okay, fine. So here, so tell me, when we have to purchase anything.
When we require raw materials.
Sorry?
When we require raw materials.
Yeah, we may purchase raw materials, okay, to just to make some finished good, to make some product, or to do some manufacturing related activities, or for assembling purpose, etc. We may get some raw material, or we may purchase finished good, or else we may get some services. Okay, this is how it will be. Now we'll talk about some goods, some items organization purchases. Okay, when you talk about this process, tell me what could be the reason organization will purchase. There should be some demand. The organization, there should be some demand. What type of demands will be having? Basically, the demand we can classify into two types here, just for our understanding. One is internal demand, other one is external demand. External demand means customer. Okay, there will be some order from the customer. To fulfill that order, to supply that material to the customer, we may purchase if we don't have enough stock. That is one reason. The internal demand means, okay, there is no just, it's material is not required by customer or somebody else, we need internally. What are the reasons? We may have some plant, for that you may need raw material, right? Your purchasing means not to sell to the customer, you will be using internally. Or else you may need some say something laptop or something for your office usage purpose. In that case also will be purchasing. Whatever it may be the case, it can be internal demand or external demand, we have to purchase. Okay, so to understand this complete purchasing process cycle, let's take simple example. Say, for example, there is sales department. Okay, we'll take small case here. Say here is 1 second. Say we have a department called as sales department. Okay, what sales department do? They do the sales activities. And how the sales process will start? They'll get the orders from the customers. Customer will place the order to sales department. Whatever the order customer is placing, that customer will be calling it as a purchase order, right? To purchasing purpose, customer is placing the order, that is for customer purchase order. For sales department, that they call as sales order. The purpose is for selling purpose, they are getting order, so that they call as sales order. Okay, say sales department received order from the customer for 100 laptops, or I'll say, yeah, for 100 laptops. Now what sales department will do? It's very generic process we are talking about. Okay, very standard process. Okay, there is sales department, they got order from the customer for 100 laptops. What next step they are going to take? They'll check with the warehouse department. Just let's call it as inventory department. Okay, there will be inventory department. So inventory department. So when they get order from the customer, immediately they'll check with the inventory department. Okay, whether stock is available or not. If available, what they do? Yes, they have to inform to the customer saying that you placed order for 100 laptops. Yes, we can supply. Anyway, they look into all other considerations also. Customer is expecting in how many days, and where we have to deliver the material. Everything they'll be taken into consideration when they get order from the customer. Okay, that we can call a sales order. When we get order from the customer, the sales department will check with the inventory department whether stock is available or not. If stock is available, immediately they'll give the confirmation to the customer saying that, okay, as per the schedules, when you are expecting, how much quantity you are expecting, at what price you are expecting, okay, with everything is fine for us, we'll be delivering. Okay, done. If stock is not available, what they do?
Placing an order.
Yeah, if stock is not available, what they do is they'll see customer require 100 laptops in how many days. Say customer is expecting within 1 week. If there is a possibility of getting the material within 1 week, then only they'll promise. Otherwise, they'll say we cannot fulfill your order, right? So generally, no company will lose this kind of opportunities. When customer place order, they'll try to get the material from here or somewhere, right? So finally, they'll be supporting their customers to get the margins. So fine. Now take the same case. Customer placed the order and sales department is checking with the inventory, but no stock available in the inventory, or else there could be some partial stock. Say 20 laptops are available and shortage is 80 laptops. In that case, they have to purchase 80. Now let's take the case as 100 laptops are not there in the inventory. Now what inventory will do? So inventory, first of all, they have to identify that there is some shortage, and internally they have to get the approval to proceed to next step to get the same material into inventory, right? So what they have to do is they have to identify. Okay, internally in the inventory department there will be supervisor, right, manager, right, who will be just taking care of everything, that approvals and process, what happening, etc. So what inventory will do is, if there is any shortage in the inventory department will just raise the requisition. What they do? Requisition. Okay, for what purpose? Purchasing purpose. So just call it as purchase requisition. Okay, they'll raise the purchase requisition. What information will be there in the purchase requisition? Somebody, see, in the inventory department, the person who is working is something like clerk or somebody who is responsible to look after the stock availability. The person will be raising requisition saying that we need 100 laptops and we need within these many days. Okay, so that specifications the user will be writing, that's nothing but requirement, right? We have a requirement of buying 100 laptops. The requirement only we are writing in the form of requisition. Requisition means requirement. Okay, so purchase requirement. To purchase whatever the laptops we require, the inventory department will create the requisition. What information will be there in the requisition? Okay, which item we have shortage, how much quantity we require, in how many days we require, right? That in all the information we can have within the requisition. Okay, inventory department, whenever there is some shortage, inventory department will raise the requisition, or you can say they'll create the requisition. Okay, done. They created. Somebody will create who will identify the situation. Okay, the stock shortage and all. Then that has to be approved by respective people who has a rights to approve the requisitions. Okay, then next step would be this purchase requisition should get approved. That means it will involve in the approval process. Say the inventory department, okay, the manager will approve it, or else some supervisor, the person who is preparing, the supervisor will be approving. The supervisor may be manager or may not be manager all the time. Okay, the person who has a authority, okay, to say you can proceed and you can get the material into inventory. Okay, that those kind of position people will approve the requisition. Fine. So it can be any kind of situation. It can be internal demand or external demand. What we have to do? We have to raise the requisition. Again, in case of internal, one requisition, external different requisition will be rising, that we don't require because we are not going to work in depth on the inventory department. Simple point we have to understand: if there is any shortage in the inventory department will raise the purchase requisition, and they have to get the approvals to move to next step. Okay, done. That's all. And apart from this, what is the responsibility of inventory department? Tell me. Apart from this, so if there is some shortage, inventory will raise the purchase requisition and they'll get the approvals to take this requirement to next step, right? Apart from that, what else inventory department will do?
Check the stock time to time.
Yeah, they'll maintain the stock. Okay, they'll maintain the stock maintenance. They'll be taking care of that. Is a general very basic function. Okay, but now we don't need to focus on that, just I'm giving as one point. Okay, they'll maintain the stock. Okay, anyway, based on the requirement, they're raising the requisition, they're getting the approvals. Now apart from this, inventory is not going to do any activity further step to get the material into organization. Now what inventory department will do is, the inventory department will pass this information to purchasing department. Okay, what inventory department will do is, inventory department will pass this information to purchasing department. Okay, saying, so we have a approved requisition. Okay, please get the material whatever required. Okay, just they'll pass the that information to purchasing department. Purchasing department. Done. See, there is a communication between the departments. Sales department is communicating with inventory department. Inventory department is communicating with purchasing department. When inventory department is communicating with the purchasing department, what information they have to share with the purchasing department? Approved requisition information. If inventory is sharing just requisition which is not approved, the purchasing department won't take any action on that. They'll say you should provide approved requisition. We always take into consideration approved requisitions only. Just if somebody is rising within the organization, they are sending without approval, no action can be taken on the any request. Okay, so what inventory department will do? They'll submit approved requisition to purchasing department. So once they receive the approved requisition from inventory department, what purchasing department will do is, they'll raise the RFQ. Okay, they'll raise the RFQ. Just make it RFQ. RFQ stands for request for quotation. Okay, request for quotation. That means they'll get the approved requisition, then they can understand how much quantity they need, which item they need, how much quantity they need. Then RFQ means request for quotation. That means purchasing department will request for quotations. Generally, whom purchasing department will request to provide the quotations? Suppliers. They'll be requesting for quotations, saying that we need 100 laptops, we need within week time. Okay, this is the, say for example, Dell laptop we require, just you give me the best quotation. That's how they'll be asking. When purchasing department will request the vendors to provide the quotation through RFQ, what vendors will do? They'll provide the quotations, right? That means purchasing department will receive the quotations. Okay, they'll receive the quotations. Okay, so say they receive the quotations from different vendors. After receiving, what they do? After receiving, what they do? Sorry? They'll just look into all these quotations, see who is giving the best price, who is accepting the best terms, best price, who are giving the less price. Best terms means which supplier is accepting, okay, the payment terms, like within 1 month or 2 months or 3 months, which supplier is asking to pay immediately. All these points they'll take into consideration. That means that consideration where they'll look into price and terms, that we can call as quotation analysis. They will analyze. Means they'll be looking into all the quotations, who is the best quotation from the customer, suppliers. Okay, so first they'll receive the quotations, then they'll look into the price other terms and everything. So who is giving the at best price and best terms, they'll be opting it. For that, first they have to analyze it, right? They have to look into all the quotation that we can call as quotation analysis. They do the quotation analysis. Okay, they do the quotation analysis. After doing quotation analysis, what they do? Why they are doing the analysis? To select the best one. Then the same they will do it. They'll choose the best quotation. They may call it as quote also. Quotation short name is quote. They'll choose the best quotation. Okay, they'll choose the best quotation. Okay, they choose the best quotation. Now, what is the next action? Once they identify who's the good customer, then they can proceed with that supplier. Once they identify the best supplier who is giving the best price and best terms, then they can proceed with that supplier, right? So yes, they'll be placing the order. For what purpose? To purchase. Simply we call that order as a purchase order. Okay, so the purchasing department will be placing the purchase order. Short we call as PO. Okay, once purchasing department will choose the best quotation, they'll raise the purchase order. Okay, they'll raise the purchase order. Here inventory department, they are raising the requisition before they go ahead to the next step. What they are doing? They are getting the approval. Okay, without approving, that should not be passed to the purchasing department. Approvals are mandatory. Okay, the right people has to say okay, right? So here also, if you are placing the order to the supplier, okay, the immediate definitely will be getting the material accordingly, right? For that reason, definitely there should be approval process. So we'll place the purchase order with approvals. That means we'll create the purchase order and we'll get the approvals. Okay, what information will be having within the purchase order? So we'll have information. We are going to purchase from which supplier, where the supplier is located. Okay, yeah, where the supplier is located, and again which material we are going to purchase, which goods we are going to purchase, how much quantity, and where supplier has to deliver that material, to which location they have to deliver, and on which date they have to deliver, all the information. And again payment terms, what supplier agreed with us to make the payment. I mean to say, like in the quotation itself will be getting, supplier says you have to pay within 1 month or 2 months. That information also will be mentioning in the purchase order. So this will get approved, and then finally will be sending to the supplier. That you may email or you may fax it or you may do in the different channels you can follow. Finally will be sending to the supplier. When you are sending, you should get the approvals internally. That purchase order should get approved by purchasing department. It should be approved. Okay, done. So approvals are done. What is the next action? Once you place the order to supplier, what supplier will do? What? Supplier will supply the material. Supplier will supply the material. That means we will receive the material, right? Who will receive the material? Physically, inventory department generally, right? Inventory department. But these people, purchasing department is responsible to take care of all those activities. These people also can make a track of how much quantity organization received and all. Reality, that can be received by inventory most of the time. Sometimes if you are buying some laptops and all, you can inform to the supplier to ship those laptops to your office location. May not be to your warehouse. That depends. Okay, if it is stock, generally will get into inventory. Other than stock, if you are buying something for other purposes, that you may get into the respective location. Okay, fine. So anyway, like whether it will it received by inventory department or purchasing department, some other department, we don't need to focus on that simple point here. So once our organization receives the material, okay, that you can record how much material you received, okay, everything as a receipt. Okay, we'll place the purchase order with approvals. Once we receive the material into our organization, what we have to do? We have to record the receipt. We have to record the receipt. This receipt only you can call as GRN. What you are receiving, Goods, right? This is a goods related receipt. Okay, we place the purchase order with approvals, then we'll get the material into organization. Once we receive the material, we have to record the receipt. The same receipt you can call as simply GRN also. GRN stands for goods receipt note. That is a note which talk about how much goods we received. In other words, you can say just simply receipt. Okay, done. We received. After receiving the material, what is the next action? Sorry, we have to inform to. Okay, if once we receive that cycle works. Okay, okay, fine. Yes, the inventory will come to know the material is ready and all. They'll pass to the sales department. Then they'll start shipping the material to requested customer. Okay, that flows in that way. I'm not talking about that way communication. From here, next step. Yeah. Now this purchasing department has to communicate with the payables department saying that we purchased from so and so supplier so and so material, and we promise we'll be paying within 1 month or 10 days. You please take this case into further step where you will be making the payment. That's how it takes place, right? So okay, we'll talk about it. And general some cases after receiving the material, there will be few scenarios. What we do is will be, yes, we'll return the material to the whom? Supplier from whom we purchase to them, right? So there will be cases if there is some damage to the material, or if the condition is not good, what are the item we received from the supplier, we have to return to the supplier. So depending on the case, we will record the purchase returns also if required. It's not like that is standard process. Every company they'll purchase and they'll return, right? If required, we have to do the returns to the supplier, that we call as purchase returns. Purchase returns. Okay, that's all. Primarily, this is the responsibility of purchasing department. What they do, they'll get the inputs from inventory department about the requirement. Based on that, they'll raise a RFQ, request for quotations. Then once supplier will give the quotation, like anyway, just will receive the same quotation from suppliers, whatever we requested based on that. Then the purchasing department will do the quotation analysis. Then they'll choose the best quotations. See, organization is a very large organization. For this quotation process also, they can have separate department also. Okay, they are into kind of large volume of the procurement and all. Definitely they can have separate department, but very standard generic process we are talking about it. Okay, that can be handled by purchasing department also. Then what happens once we choose the best quotation out of the quotations, whatever it is received from the multiple vendors, you can place the purchase order. And when you are placing the purchase order to supplier, it's a mandatory you have to get the approvals. That means approved purchase order will be sending to supplier. Once supplier will receive our order, then they will respond by supplying the material. Whenever we receive the material into organization, we'll record the receipt. The same receipt you can call a GRN. GRN is nothing but goods receipt note. Done. Okay. If required, we'll do the returns also to the supplier, which we call as purchase returns. Done. So after that, what purchasing department will do is the purchasing department will have a communication with the payables department. Okay, the purchasing department will have a communication with payables department. Fine. So simply here what they do is, okay, so what they do is, which information purchasing department will be passing? Receipt information primarily. They'll be informing from so and so supplier we received so and so material with this quantity and all. They'll be sharing. So that means purchasing department will share. You can say receipt or GRN. Purchasing department will be sharing the receipt information or GRN information with payables department. Let's name it. Okay, it's a payables department. Okay, the purchasing department will share the GRN information with payables department. Based on GRN information, payables department will maintain the record. What record that is? Tell me, you know what payables department will record? The record will be within that only. What is that? Purchase invoice. That's it. Based on receipt information, payables department will maintain the purchase invoice. That's all. They'll record the purchase invoice. Okay. They'll maintain the purchase invoice. What information will be having in the purchase invoice? Almost whatever we have in the purchase order. Okay, we can have more than that also, some additional information. Within the purchase order invoice, we can have who is the supplier, what is the supplier address, and when we have to pay, what is the invoice number. We'll be receiving the invoice from the supplier, right? The same information, but when we are recording the system, blindly we don't follow whatever the supplier will send the invoice. You may purchase for 10,000, you may get invoice, okay, for 20,000. Are you going to pay based on whatever you received? No. Always will be verifying whatever your records talks about, right? So you'll be always making the payment based on whatever you received, right? So supplier invoice will be receiving, but completely you are not going to depend on supplier invoice. Always will depend on how much you received, okay? And again, what are the supplier invoice number and all will be mentioning. Simply in the purchase invoice, we will be mentioning who is the supplier, what is the supplier address, and what is the invoice number, what is the invoice amount, what are the due dates when we have to pay, and how we are going to pay. We call as payment method, whether we promise to supplier to pay through check or cash or electronic process. This all the information will be having within the purchase invoice. Okay, then whenever we arrive the due date, payables department has to take the responsibility of making the payments. Okay. The payables department will take the responsibility of making the payments. Okay, done. So this is the primary responsibility of payables department. What payables department do? They'll record the purchase invoice based on the GRN information, and they'll be making the payments by following the due dates. That's it. Okay. When you talk about purchasing, what we can purchase? See, when you talk about, let's talk about purchase invoice. So the purchase invoice can relate it to expenses, right? Expense related purchase invoice we can have, or else service related purchase invoice we can have, right? And we can have asset related purchase invoice also. Whatever it may be, you have to pay. You may spend some expense, you may just take some services, or else you may buy some asset. Asset means I am referring fixed asset. Whatever it may be, we have to have a purchase invoice. It can be asset or it can be goods, okay, service, anything. There should be some process. Okay, this is kind of process. We'll raise the requisition, we have to get approvals, then we'll get the quotations. This is how this process should work. Okay, so finally the purchase order can be material, goods related purchase invoice, or service related, or asset related, okay, or anything, expense related, anything. Okay, so if this purchase invoice is related to asset, okay, we have to do some additional activity. See, it can be expense, or it can be inventory related item, or it can be service. Generally what we do, by following the payment terms, we'll make the payment. But if purchase invoice is related to asset related purchase invoice, what payables department will do is, the payables department will be sharing the asset related purchase invoice information with asset department. Okay, because the asset department has to maintain how many assets we have in the organization, right? Since there is some purchase happened for one fixed asset, that information should be maintained by asset department. For that, what payables department will do is, the payables department will be sharing this asset information with asset related purchase invoice information with, tell me, asset department. Now what happens is, here simple process. So this department, so it's not coming like this, or else let me just put this mark here. Okay, so this is how just the payables department will be sharing this purchase invoice information with asset. All purchase invoice information or specific purchase invoice information? Specific. Only Asset related purchase invoice information only they'll be sharing with the
Asset.
asset department. That is the point here. That's it. Okay, done. So which information they are sharing? Just I am going to make a note here. Which information?
Only asset.
Asset invoice. Simply you can say, instead of calling purchase invoice, you can call as invoice. Which invoice? Asset invoice. Asset invoice information only they'll be sharing with the asset department. Now once they receive the asset information from, or else asset invoice information from payables department, what asset department will do is, based on that information they'll create the asset. They'll create the asset. And based on the usage they'll be calculating the, tell me.
Asset value.
No. Depreciation. Based on usage. Depreciation. Okay. Based on receipt, asset department, payables department is creating purchase invoice. If the purchase invoice is related to expense or service or inventory related purchase invoice, they don't need to take any further action on that. Just they'll take it to next step for the payment and all. Okay, if the asset purchase invoice is related to asset related purchase, then that asset invoice they'll be sharing with asset department. Once asset department will receive the information from payables department, based on that they'll create the asset, fixed assets, and based on usage, the ongoing process, they'll be calculating the depreciation. Now other side, what asset department will do is, okay, they have payments information, right? The payment information they'll be sharing with the cash department. Okay, the payment information asset department will be sharing with the cash department. For what purpose? You know that?
Payments.
Tell me, already we discussed. For bank statement reconciliation purpose. Okay, what payables department will do is, the payables department will be sharing this payment information with cash department. What cash department will do is, okay, the cash department, okay, they'll just here, I'm just giving few points here. So all this payment information, okay, all the payment information they'll be here taking here, which they received from where? Payables department. The cash department is receiving all the payment information from payables department. Other side, cash department will be getting the bank statement. They'll maintain the bank statement on other side. Then between this bank statement and payables payment records, they'll do the verification. That process only we call as reconciliation. That's it. So here, what is the role of cash management? Basically, the cash management we can use to maintain the bank accounts, and the same we can use for bank statement reconciliation. Okay. Bank statement. Take all the points. Okay, let's take all the points. Done. Fine. That's it. Okay, this is how it flow. Finally, already we discussed all the information will be getting into common department, right? We discussed. Okay, which application we'll see anyway. For these departments also will be giving the actual application name, and we'll have a other department called as, say, common department. Okay, common department. Just name it as common department. Okay, fine. We have a common department. So where this common department will get the data from all the departments. It will get the information from asset department, and it will get the data from payables department. It will get the data from cash department, and it will get the data from purchasing inventory also. Okay, but already those are in the flow only. I am not just specifying that marking and all. Okay, so finally this cash common department will get all the information from the different departments. So for what purpose? To prepare the financial reports. Okay, prepare the financial reports. See here, multiple departments are involving, right? For entire this procurement process, procurement and purchasing and payment, multiple departments are involving. If you take some individual related, say some person is going to buy something, how many people will be involving, and how many departments will be involving? Some individual person, or else you are going to buy laptop, how many departments are involving? Nothing. No department, but almost more or less will do all these activities. But organization point of view, there should be good control and process. That is the reason multiple departments will be involved. But if you or me are going to buy the laptop, okay, we can take care of everything. Okay, in our case, how you can take simple example, say you are doing this course. You are doing this course, I may just suggest you today saying that better you can have laptop. Then here, how organization is rising the purchase requisition? Why organization is rising the purchase requisition? Because there is some demand. Now you can take this point as demand, right? You have a demand. You are in the need of laptop. Okay, what these people are doing? The organization point of view, they are rising the purchase requisition. So if you are not working anywhere, what you will be doing? See, I am telling now you have to buy the laptop. Then what you will be doing the next step?
We'll go direct to shop.
No, tell me fact. You are not working anywhere. You are here today to learn this course. I'm just telling you, you can have laptop so that you can spend more time for this practice, etc. Anyway, we have lab and all, but just I'm telling this example. Okay, then immediately what you are going to do, tell me the fact. No,
We'll get the quotations.
no, we'll call to home, right? I need those points here to compare with this. We'll make a call. Here the call is equal to you are raising the requisitions, right? We are making a call. I need laptop. Here in the same way, organization saying we need 100 laptops. Here these people has to get approval, right? Do we need to get approval from parents or not? Yes, we have to get it. Once that is done, the rest of activities can be taken by organization point of purchasing department. But here, nobody is here to help us, so we have to do purchasing department activities also. What we'll do here, these people are requesting for quotation. Yes, even we do very good RFQ process. We'll go to the multiple shops. I need so and so laptop with this configuration. Can you give me the quotation? We'll get from multiple shops. Okay, these people also doing the same. After that, what they are doing? They are receiving. For them, it may take some time. For us, it won't take time. Immediately, we can get the quotations. And then what we have to do? We have to do the analysis. What they are doing? They are doing the quotation analysis. What we do? So we have to find the friends who know about these laptops, and all our roommates or friends. We'll make a call or we'll sit in the room and we'll be looking into all and we'll take the decision. That only quotation analysis, what we are doing. Everybody is doing quotation analysis, not only companies. Then even we choose the best quotation, the same way company also choosing. The next step is placing the purchase order. In our case, just we'll directly walk to the shop. Okay, directly we'll walk to the shop and we'll ask them, yeah, I need laptop. That's it. Directly you are placing the order. Okay, here no approval. Already you got approval from your parents in this stage only. Then you don't need to get any approvals here. Directly you can go and do place the order. Immediately you'll be getting the item. Okay, once you receive the item, if something damage under, then there itself you'll be returning. You'll be getting the another item. Done. Then there itself will be. So anyway, just you'll be getting the invoice from the shop, and there itself will be making the payment. Always that will be treated as a asset only for us. That will be part of our assets. Our assets means laptop or etc. etc. What will be having with us, that's it. And we generally don't do the bank statement reconciliations. Even some people will do also. They'll be every purchase they'll be making a note, and they cannot compare with the bank statement, but that is a cash book kind of thing where payables department will maintain all these payments. In the same way, the person will maintain, okay, this month I purchased this, etc., etc., and they'll maintain the same. Similar to that, payables department will record the payments. Finally, since organization, there will be good flow of the transactions and all, they'll be just doing the getting all the data here, and they'll be doing, because we are always in that same process only. Not always, I mean, sometimes when you do some purchases and all, almost we are also just coming across similar process and all. The same organization, when organization is doing that, multiple departments will be involved. This is how that activities can be managed across the departments. Okay, if you have any doubt on this, please. So this is a process to understand the standard purchasing cycle. Okay, from how where the purchasing process starts, where purchasing process starting, of course based on customer order, but now I'm not giving much importance to this. Simply the requirement starting with the inventory. Okay, it can be internal or external demand, whatever it may be. So it is starting at with inventory. Okay, in inventory, by raising the purchase requisition, okay, purchasing process will get initiated, and finally it will end with the payment. Once you make the payment, these activities, if you want to do, you can do, otherwise you can ignore also, right? That depends. See, some companies may not do bank statement reconciliation. Okay, may not be true all the time, but if they want to do, they can do it. Otherwise, it's not a business activity, right? So for internally to have a better validation and all, they are doing it. And again, this is also not business related activity. Just they are sharing the information between the departments, and this is all about their getting data into one place to do the consolidated reports and all. The core business transactions, okay, from where to where it takes place, from starts with inventory to end with the payment. Means here requirement starts, here requirement will be closed, and everything will be complete with the payment action. Okay, fine. So this in this process, what are the naming conventions we have for each and every application? What inventory is doing, we can maintain the stock, and we can raise the purchase requisitions, and we can get the approvals for that. To do all these activities, to stock maintenance and requisition purpose and all, we have an application from Oracle. Okay, we have an application from Oracle. Okay, that application name is, just make a note, Oracle Inventory. We have an application from Oracle called as Oracle Inventory. Short we call as short name is INV. Okay, so by using Oracle Inventory application, we can maintain the stock, and we can raise the requisitions, and we can get the approval for the same, and we can perform many other inventory related activities also. Okay, but not required for us now to understand this process. Okay, then next, purchasing department, what the department is doing, they are raising the RFQs, they are getting quotations, analysis, they are choosing the best one, they are placing the orders with approvals, then they are recording the receipt. When organization receive the material, if required, they are doing the purchase returns. To perform all these activities, we have application from Oracle called Oracle Purchasing. You suggest me what name we can give? Since we, for inventory we give an INV, for purchasing we have to give. Yeah, that's a reasonable answer, correct. But what Oracle is doing is, so out of all these purchasing activities, very important action is placing the order, right? So that is the reason, even PO means purchase order, still what they are doing is they are giving the same name for application also. Oracle Purchasing application we call with the short name called as PO. What do you mean by PO? Means if I am referring application, then you have to say Oracle Purchasing. If I am referring the process, you have to say, that's all, purchase order. Okay, PO means it's application means purchase order application. So process related means purchase order. That's it. Okay. So Oracle purchasing application we have with the Oracle within the Oracle purchasing application we can perform all these activities. And accounts payable. Here we have this payables department, right? So already we discussed this, right? So to record the purchase invoice and do payments, we have Oracle accounts payable application, short AP. By using accounts payable or say AP application, we can record the purchase invoice and we can process the payments. And to maintain the bank accounts and to perform the bank statement reconciliation and other bank related activities, we can have a we have application from Oracle called as Oracle Cash Management. Short name is CM. Fine. Done. Sorry. Here, okay. What asset department is doing? They are maintaining the assets and they are calculating depreciation, many other asset related activities. For that, to do those activities, we have application from Oracle called as Oracle Fixed Assets. FA. Okay, FA, Fixed Assets. And to get all the data from different applications and to maintain in one place to prepare the financial reports, we have application from Oracle. What is the name? Oracle General Ledger. This is all we just discussed in yesterday's session. Same. Okay, done. Now you know the background, right? If you are going to record the purchase invoice and payables, you know why we are recording, where the process got started, in between what are the different activities taken place. Finally, when we are creating the payables and purchase invoice, also purchase invoice we know very well. That's it. Okay. So these are the different departments will be involved in this process, but the core process wise, okay, purchasing and payment process wise, the process will start with inventory with the action called as purchase requisition, and the process ends basically with the payment. Once you make the payment done, rest of activities whatever you want to do internally you may do, may not do, but you have to respond to the supplier by making the payment. So for that is the reason we have to consider these activities are very core activities in the process of purchasing and making the payment. The remaining delay cash department related reconciliations and fixed, whether you share with the fixed assets or you are not maintaining the proper records, that's up to you. And you may share with the common department or say Oracle General Ledger, okay, for reports and all, that's up to you. But when you purchase, you have to make the payment. These process should be done across those departments. Okay, done. Fine, clear, right? So the same we'll see in brief. Okay. So which departments we have here? We have a say inventory department. Just 1 second. We have an inventory department. Then we have purchasing department. Then other department. I'll take small circles here because I cannot write everything. Okay, this is say inventory. This is purchasing. Then inventory will communicate with the purchase department. Then this purchasing department will be communicating with payables department. Then payables will be communicating with
Cash.
asset, one side with asset, other side with the
Cash.
so I'll take asset department here and cash department here. And finally all the information will be sharing with common department. Now we'll go with the application names only. We know already we discussed about departments and all. Finally we came up with some names and all that will be mentioning here. Okay, here first department is inventory. So short name, let's go with the short name INV. Another department is PO, purchasing. Short names, we'll go with the short names. Then AP, then FA, CM, GL. Okay, these are the departments we discussed. Now what inventory will do? They'll raise the purchase. We discussed why they rise, right? Reasons also discussed. Now again we don't touch that point. Purchase requisition. They'll raise the purchase requisition and they'll get the approvals. They follow the approvals to go to the next step. Then what is next? Purchase department. The inventory department will be passing information to purchasing department. Okay, what information? The approved requisition they'll be sharing with the purchasing department. Based on that, what purchasing department will do? They'll raise the RFQs and they'll receive the quotations, they'll receive the quotes and they'll analyze. They'll do the analysis, they'll analyze, then choose the best one. Best one or multiple. See, it's not mandatory they have to buy from one supplier only. They can choose 2-3 suppliers quotations also. They'll choose the best quotations. They'll choose the best quotations. Of course. Done. The next step, they'll place the purchase order. They'll place the purchase order. Then for the same they'll get the approvals. Then once organization receives the material, they'll record the GR, goods receipt note. Then if required, what they do, they'll do the returns. We call as purchase returns. That also they do. That's all. Okay, these are the activities performed by purchasing department. Then what happens? The purchasing department will be passing. Okay, which information? They'll be passing GR information with accounts payables department. Based on that information, they'll create the purchase invoice. And then by following the due date, they'll make the payment. Done. If the purchase invoice is related to asset purchase, then payables, what they do? Payables, that information they'll be sharing with the asset department. Based on that, asset department will create the assets. They'll create the assets. And based on usage and all, they'll be anyway calculating the depreciation. Okay, fine. Then AP will be sharing payment information with cash management. This payment information they'll be sharing with the cash management. Okay, by default, what is the purpose of cash management? Bank account maintenance, right? Anyway, they'll maintain the bank accounts. Against the bank account, what are the bank statements they have? Those bank statements they'll be comparing with this payment related information, which we call as, they'll do the bank statement reconciliation. Okay, they'll perform the bank statement reconciliation. Finally, what they do? Next, all departments. All departments will be sharing the data to
General ledger.
general ledger application or say department. Here, what we do in the general ledger, we prepare the financial reports. Not only just financial report, we have certain other purpose also GL. But now for understand the process we are discussing, we have some features in every application apart from whatever we are discussing. But the primary purpose we are talking about. Okay, done. So this is the process. So this process, whatever we discuss here, this process we call as P2P cycle. Just make a note. We call it as P2P cycle. This we call as P2P cycle. Don't write as a formula. P2P cycle. Okay, here P2P stands for procure to pay. P2P stands for procure. Please take all the points. Procure to pay. Procure to pay cycle. Okay. The procure to pay cycle. Okay, P2P cycle means procure to pay cycle. That's it. So what is the meaning of procure to pay cycle? This process, okay, will cover right from procurement to till we make the payment. Where we are starting the procurement process with the requisition, and where the payment is ending in the payables up to here. That means majorly here as a core process. Okay, so you can just take this section as a this you can say exactly P2P cycle. But these additional points also you can take when you are talking about, when you are explaining, because you have to present or you have to talk about the ending stage also. Okay, but what is a P2P cycle means, this is what we have to explain. If somebody is going to ask you what do you mean by P2P cycle, P2P stands for procure to pay cycle. In procure to pay cycle, what we do is, if there is some demand, okay, inventory will raise the requisition that has to get approved. Then the inventory will be passing that information to purchasing department. Then they'll raise the RFQs, they'll get quotation, they'll do analysis. Then finally they'll be placing the purchase order with approval. Once the organization receives the material, tell me, they'll record the receipt or say GRN. And if any just damage or any issue with the material, they'll do the purchase returns. And finally purchase department will be sharing GRN information with payables department. Based on GRN information, payables department will create the purchase invoice. Okay, and by following the payment terms will make the payment. If the purchase invoice related to asset related purchase, okay, that invoice information AP will be sharing with FA, and pay asset department will maintain that information as asset, and they'll be calculating depreciation accordingly. And finally what we do, once the payment information, the AP, what it will do, the payment information the payables department will be sharing with the cash management CM department to do the bank statement reconciliation. Finally all the information will be sharing with the GL for financial reports purpose. So when we talk about what exactly, this is the P2P cycle, but what are the core applications? Application, other name we discussed, module, right? What are the core modules are involved? Major activities involved in the P2P cycle means, you can say from inventory to AP, not GL. The complete cycle. If somebody is going to ask you, explain an entire cycle, but if there is some kind of cross question, exactly which modules will be involved in the P2P cycle, then go on to specify inventory, P1 to AP. These are the primary applications. By these, by connecting to these application, AP already part of P2P cycle. The connectivity we are talking about. So that also you can add there, but primary modules, key modules in P2P means inventory, P1 to AP. Requirement starts with inventory, ends with the AP with the payment. Done. The rest of things, whatever you are doing, that's up to you how you manage within that. But that would be the standard process. Okay. So this we call as P2P cycle. Why we are calling a cycle? Continuous process means whenever you want to purchase, this is a process. It's not like just for today it is a process, right? Tomorrow if you want to buy, same process. Anytime if you want to buy, same process. But there could be some activities where you may not perform all the time. Say today we identified one supplier to buy the laptops. We purchased today. Tomorrow we need laptop. Do we need to go with the complete cycle? Think and tell me. Yes or no?
No.
Why? Yes means why? No, we no need to go with the complete cycle. We identify the good customer supplier. We have a good supplier. Again, tomorrow also, do you go and ask for quotations? They laugh. Boss, what you are doing business? Okay, we know, because again, if you are going to buy after 6 months or 1 year, there could be some fluctuations in the price. Okay, to identify who are giving the best price, then you can go with the quotation. If you buy from one supplier today, tomorrow you are not going to ask for again quotations, right? You'll call again, same price, same price. Then proceed. If he is going to say no, price is increased, then you may start with the quotation process, right? So when you are procuring something, definitely will raise the requisition and it has to go with approval. But when will be rising the RFQ or not, that depends the time to time, like when we are going to do that activity. But anyway, we'll place the purchase order, we have to receive and all, and we'll have purchase. This is the standard process, okay, which we call as P2P cycle. Okay, done. So within this P2P cycle, how many applications are covered out of 5 financial applications? 3 not 4. How you are counting? I don't know. Then see here, 4 are covered, right? For only one application is left, receive. So that also we'll see now in the sales process. Okay, is clear, right? If you have any doubt on this, please. Okay, fine, done. Now we'll talk about sales process. Very simple compared to this purchasing process. Okay, fine. Now already we discussed who will deal with the sales. Which department? Which department will be dealing with the sales? Sales department. Okay, fine. So let's say we have a sales department. We have a sales department. Okay. When it says sales department, what sales department will do is when customer place the order, they'll record that order in the system. That simply you can call as what sales department do is they'll record the sales order. Sales orders. You can say SO, short name for the sales order. When customer place the order, the sales department responsibility is first they have to record the order. Whether they supply accordingly or not, that's the second step. Okay. First they have to accept. First they'll receive it, whatever. Then they'll check with inventory and all. We know the process. We'll discuss detail level. Okay, done. Okay, say the sales department received an order for 100 laptops. Okay, 100 laptops. What is the next step? They do? Please tell me. Sorry?
Check with the
Yeah, simple, right? They'll check with the inventory. They'll check with the inventory. Will be inventory department. They'll have a communication with inventory department. They'll check with the inventory. Say inventory is saying, yeah, stock is available. Stock is available. Now what sales department has to do? Sorry? See, think supplier is placing the, customer is placing the order means what order they are placing? For customer, which order that is? Purchase order. When somebody will place a purchase order, just now we discussed, once they choose the quotation only, best quotation, right? That means we already given the quotation, right? When customer will be placing the purchase order to us, which we treat as sales order,
Ours is best.
He just requested us for quotations. We given the quotation, they analyzed, then selected our quotation. That is the reason they are placing the purchase order that we are calling a sales order. Done. That process is over. That is because of that background only we are getting order from the customer. Now we received order from the customer. What is the next step? We'll check with the inventory. Inventory says stock is available. Then what is the next step? We have to inform to the customer saying that you placed order for 100 laptops. Yes, we have stock. I mean, we don't say stock availability. Yes, we can fulfill it. We can supply within 2 or 3 days, whatever you are asking. So that we have to confirm with the customer, right? So that we will say we'll book the sales order. Okay, booking the sales order is nothing but confirming the sales order. Means we'll be giving the confirmation to the customer as we are going to supply. The next step would be sales department. They'll book the sales order. First they'll receive the sales orders, they'll record it, then they'll check with inventory if stock available, or sometimes if stock may not be available, still they can proceed and they can book the sales order. Reason, customer require within 1 week, they spoke to the, maybe the inventory may speak with the purchase department, they may say yes, we can purchase within 2 days only. In that case also, even stock is not available, they can promise to the customer, right? So that could be the case. First we'll record the sales order. When we get order from the customer, then we'll check with inventory if stock available, or else if there is any possibility to supply to the customer. Okay, sales department will book the sales order. Done. After booking the sales order, what we have to do? Think very generic way. No need to understand. I don't know Oracle, what they do in the Oracle. Okay, no need to go with that kind of thoughts. It's a very generic process. You will go somewhere and you will be buying custom. The shop people will be saying yes, we have that. Then what they do, etc., etc. You know very well. The same I am asking. You said sales department giving the confirmation to a customer. What is the next step? Sales department has to do. Any answer? They have to send the material. Where stock will be maintained? Warehouse, inventory. So this is inventory. Now let's try to understand what is the basic structure of inventory, how inventory can be managed in the very generic way. Okay, fine. I'll take simple example here. Think this is a inventory space. I'll call it as this is the inventory. Inventory organization. I'll call it as inventory organization. Means total warehouse. This is a warehouse management. Okay. So we find some partitions in the inventory, right? Why? Why we find some part? We in our institute we have partition, right? Why we have?
To identify.
To keep everything separately. This is a classroom, that is a discussion room, that is a some admin room, or etc., etc. We kept it different. In the same way, when organization is going to maintain the stock and the inventory, they'll just maintain separately. Why? To identify easily, to for just first of all to segregate so that easily you can identify. So the same concept here I'm going to just put here. Say here you have partition like this. So these are the partitions within the inventory organization. Within the inventory there are some partitions. These partitions generally we call as sub inventories. Call it as sub inventory. Maybe this inventory, maybe this sub inventory may be for finished good, FG, finished good. Okay, or else you can go with some items. This inventory for mobiles. Okay, this is a mobile sub inventory. Mobile sub inventory. Another can be something computers sub inventory. some ACs. Okay, sub inventory. That's it. Okay, just we have a three sub inventories here where we can segregate and maintain the items separately, so that when we need that easily we can access and easily we can manage them within the respective areas. Done. Okay, done. Now this is the case. Think this inventory is organized like this. Okay, this is the inventory. How the inventory is there? The total inventory. There are three sub inventories. Now we got the order from the customer for computers. Okay, think like laptops and desktops. Everything are there in the computer sub inventory. Now, what is the first action we have to do? What inventory people will do? You tell me.
Check this in upload.
The stock is there. That is the reason we booked.
I said,
Nothing now. No need to check anything. Everything is got confirmed.
it was
Now just we have to ship, right? Already see here we got the order and we given the confirmation, means after checking everything only we will confirm. We given the confirmation means you think just we are going to ship, means the item stock is available here. Okay,
Approve.
fine.
Taking approval.
Taking approval, done here. Just everything is done. Let me just name this also. So these we are calling as what? This partitions we are calling as sub inventories. The same one, let me write here. This is all we are calling as sub inventories. Okay. Now, if you want to move the material, if you want to ship the material to the supplier, what we'll do is, this is the complete inventory. We'll be moving the material from here to here. This is space. Generally, this space you can call a staging area. This we call as staging area. See, if you are just shipping the material to the customer, what we'll do first, we'll move the material from sub inventory to staging. In staging, you can load the truck. Okay, then you can ship to the customer. So, what is the first step we have to do? Already we received the order from the customer and we given the confirmation to book the sales order. Now, first step what we have to do? We have to move the material from, tell me, sub inventory to staging. Okay, we have to move the material from sub inventory to staging. This is the first step. What is the second step? We'll have a customer, right? So we have customer here. Then what is the second step?
you have to ship to the customer.
We have to move the material from our staging to customer location. That we treat as step 2. Okay, step 2. Okay, step 1 will get order. Step 2 will give the confirmation to the customer, but internally we'll have a check with the inventory. Then physically what we have to do? We have to move the material from sub inventory to staging as a fourth step. Okay, what we'll do? I am talking about 1 and 2 within the inventory, and again I am taking the sequence overall activities. Okay, here 2 activities will do. Inventory point of view, will move from sub inventory to staging, staging to customer. Okay, this is the process. Okay, you say you are purchasing some material. In that case, what we do first, we'll get the material into staging only. From here, we'll be placing in the respective sub inventory. That means, what is the purpose of staging? To maintain the stock for temporary purpose. Take simple example our institute. When you enter inside, when you are entering inside or when you are going out from the institute, from which space you are going, there is some separate area, right? That is staging kind of thing. Okay, you are coming to class. Okay, first we'll come there. From there, you will be just finding the room and you will be moving into that room. And even when you are leaving, also that is a place. That is means that is some kind of common place which we will be using for inflow and outflow. The same way here for item inflows and outflows, everything happens through staging area only. So here, so these activities who are doing recording the sales orders and booking sales orders, sales department. But these activities should be done by inventory. If organization is very big organization, there will be separate department, shipping department, or many other departments will be involved. But Okay, general scenario, general case, you just think inventory will be doing these activities. Okay, so then what inventory will do is they'll be moving the material from here to staging. Whenever, why they are doing? Because sales department is informed to inventory to ship the material to so and so customer. By following that order they are doing. When they are doing the relevant activity, they have to update to sales department, right? That means whenever inventory will move the material from sub inventory to staging, the inventory department will inform to sales department saying that we move the material from sub inventory to staging. Now in the sub inventory, okay, sorry, in the staging, material is ready to ship or for loading purpose into truck or whatever it may be, or else in the staging material is ready for packing, or else packed material is ready in the staging. That's all about only the task we have to understand. Here we move the material from sub inventory to staging. The same information they'll be communicating with the sales department. Customer will be calling to whom? Sales department, saying that what about my order status? Sales department should be responsible to say yes, packing is done, it's ready, it's in the loading process into truck, something else. That is the reason each and every update inventory I should share with the sales department. So whenever we move the material from sub inventory to staging, okay, that information sales department will be tracking in their system, tracking in their books as a pick release has happened. Okay, what we call pick release. Just make a note. Pick release. What do you mean by pick release? Pick release is nothing but moving the material from sub inventory to staging. You have to make a note. It's not like just your understanding. Okay. When we move the material from sub inventory to staging, that activity, okay, that action can be tracked by sales department as pick release. They record in their books pick release has happened. The meaning is the materials are moved from sub inventory to staging. That's it. Okay. Moving material from sub inventory to staging we call as pick release. Moving material from sub inventory to staging we call as pick release. Okay, done. After pick release, what is the next action? We have to ship the material, right? That means we have to move the material from our staging to customer locations. Okay, customer locations. So once we move the material from our organization to customer organization, or else you say staging to customer location, or else you say our inventory organization to our inventory to customer inventory or customer organization. You can say, you can go with any statement, but all are same. Okay, when you move the material from our organization or our staging area to customer location, okay, that information inventory will be sharing with sales department saying that we ship the material also. Then that action, okay, sales department will be recording in their books as a ship confirmation. Ship confirm. Ship confirmation. Okay. Pick release means moving the material from sub to staging. Okay, and when you move the material from staging to customer location, that will be tracking in the books as a ship confirmation is done. When you say ship confirmation is done, we have to understand materials are moved from our location to customer location. That's it. Okay. Then when you ship the material to customer, what is the probability we have? Okay, what some action customer can take, what you can just expect that returns. Okay, we have a just possibility where customer can return. When we discussed about P2P cycle, we discussed being a customer, we may return to the supplier. Now we are acting. When you talk about this sales process, let's take our role as a customer supplier. So when we do the sales, our customer can return to us, right? So in that, which returns we are getting? We sold and we are getting returns. Those are nothing but sales returns, right? So here the sales department only will be taking care of the sales returns. Sales returns. Okay, then sales returns. So primarily these are the activities can be performed by sales department. Okay, sales department is responsible to receive and record the sales orders from the customers. Then they'll check with inventory for stock availability. Okay, and they'll give the confirmation to the customer by booking the sales orders. Then whenever we move the material, we in the sense the inventory people. Okay, whenever inventory people will move the material from sub inventory to staging, that can be tracked in the sales department as quick release. And the moment we ship the material from our organization to customer organization, that can be tracked as ship confirmation. If you get any returns from the customer, that can be recorded as a sales returns. In sales department point of view, you can say RMA process. That is a purely application related term, not required for us now. Okay, done. That's all. You are clear on this inventory structure, right? This is a simple point you have to understand. When you talk about inventory, there will be sub inventory and there will be staging. It may not be applicable in all the businesses, but very generic structure which most of the organizations will follow. That's what we are discussing. Okay, done. Now we discussed up to sales returns also. Okay, the sales returns optional, right? Optional in the sense that depends on case. If customer identifies something wrong with that item and all, they may return. Otherwise, our process will end with the ship confirmation with the sales department. Okay, so just they ship the material, inventory shipped, and the sales department got the update and they recorded in their books as ship confirmation is done. Now sales department will communicate with the receivables department. Okay, now sales department will communicate with the receivables department. Okay, they'll communicate with the receivables department. Okay, they'll communicate with the receivables department saying, okay, we sold to so and so customer this much quantity, this is the price, and customer promised will be paying within week time or 10 days. The terms and all, everything they'll be sharing. For that, what information they'll be sharing? The ship confirmation details sales department will be sharing with receivables department. That is the point. Okay, which information they'll be sharing? Sales department will be sharing ship confirmation details with receivables department. That's it. This is the point we have to understand. Okay, the sales department will be sharing ship confirmation details. Means ship confirm means to whom, what are the details, everything will be there. Okay, the ship confirmed information with the receivables department. Based on ship confirmation details, receivables department will create what? Sales invoice. That's it. They'll create the sales invoice, and whenever they get the payment from the customer, okay, they'll record the cash receipt or say just receipt. Done. Okay, once they get the cash, means some check and all, they'll be sending to the bank, remittance process and all that. We'll discuss the detail level within the application, but now it's not required. The simple activities receivable department do is, one, based on the ship confirmation, they'll create the sales invoice and receivables. Whenever they get the payment from customer, that they'll record as a cash receipt. Done. Now what receivables department will do is, the receivables department will be sharing this cash receipt information with cash management. Okay, they'll be sharing with the cash management. We have an application called as cash management. Say cash department here, just we are talking about. Okay, cash department, what receivables will be sharing this information, right? Okay, receivables will be sharing this cash receipt information with cash department. For what purpose? What purpose? For bank statement reconciliation. They'll do the reconciliation with the payments as well as receipts, right? So for bank statement, anyway, the cash management will have a bank accounts and all. They'll maintain the bank accounts. Already discussed. Again, I am not writing that point here. Here the purpose is bank statement reconciliation. That's it. So receivables department will be sharing cash receipts information with the cash department for bank statement reconciliation. Then finally all the information will get into common department. Okay, all the information will be getting into common department. We'll get the data from receivables. Okay, from receivables to here, and from cash management to here, and from inventory to here. All the data will be getting here. Okay, and finally we'll prepare the what will prepare financial reports. Okay, this is a complete sales cycle which we should understand when we are working on financials. Okay, fine. The sales department will get the orders from the customer. They'll record and they'll just check with inventory. Based on the supply possibilities, they'll be booking the sales order. Then whenever we move the material from sub-inventory staging, that action will be tracked by sales department as quick releases happen. And then whenever we move the material from our organization to customer organization, that will be tracked as a ship confirmation. Ship confirmation nothing but moving material from our organization to customer or staging to customer location. Then if you get any returns from the customer, same will record as a sales returns. Finally, sales department will be passing this ship confirmation details to receivables department. Based on that information, receivables department will prepare sales invoice. What information will be there as a part of sales invoice? Who's the customer? What is the customer address? Where we have to ship the material? Where we have to send the bill invoice? And which item we are selling to the customer? How much quantity? What is the price? All the details will be there as a part of sales invoice. Then whenever your customer make the payment, that will record as a cash receipt. The cash receipt information receivables department will be sharing with cash department for bank statement reconciliation. Finally, all the data will be getting into common department to prepare the financial reports. Now we'll see what are the naming conventions we have for respective departments. Okay, now first one is sales department. Okay, we'll talk about the sales department. Right. For sales department, to record the sales orders, to book and to track the pick release ship confirmation sales returns, we have an application from Oracle called as Oracle Order Management. Oracle Order Management, OM we call. Okay, we can call it sales management also. Okay, but they name it as order management. Basically, they'll be processing the orders. To record the sales invoices and to record the cash receipts. Okay, we have application from Oracle called as Oracle Accounts Receivables. Oracle Accounts Receivable. Call it as year. Okay, for cash department to maintain the bank accounts for bank statement reconciliations, what we have? We have a application called as Oracle Cash Management, CM. Okay, Oracle Cash Management, CM. To collect the data from all the departments and to prepare the consolidated reports or say financial reports, Okay, we have an application from Oracle called Oracle General Ledger application. GL. Done. Inventory already we discussed. Oracle inventory high and V. That's done. Okay, this is the complete sales process. Okay, now just we'll see high level. Okay, so taken all these points, right? The high level, if you see, so we have a OM, then AR we have, and we have a CM. I'll take here CM. Then finally we have a GL, just for communication to check the stock availability. We have a inventory. It won't play a major role and all, right? Okay, here also. Fine. Okay, so here we have a GL. Done. So now let's name it short names. This is OM, order management, and this application is ER, account receivables. This is cash management, CM. This is GL, general ledger application, and here we have a inventory. Now here, what activities we do in the order management? We'll record the sales orders, S4, and we'll check with the inventory. We'll have a communication with inventory, the stock availabilities and all, right? We'll check with inventory. If stock is available, immediately what we'll do? We'll book the sales orders. Book sales order. Book the sales orders. Then, so whenever inventory people move the material from sub-inventory to staging, that can be tracked by OM as pick release. Please, then when we move the material from our organization to customer organization, that can be tracked as a ship confirmation. And any returns from customer will record as a sales returns. Okay. So these all of the activities are handled by order management. Done. Now what OM will do? OM will communicate the. OM will be sharing ship confirmation details with account receivables department. Yeah. Now based on that, what AR will do? They'll record the sales invoices, and they'll record the receipt or cash receipt whenever they receive the payment from customers. Record the cash receipts. The primary task will be performed by receivables department. Then what AR will do? The AR will share this cash receipt information with cash management for the purpose of bank statement reconciliation. Bank statement reconciliation. Finally, all the information will flow into GL. We'll get into GL. Then here all the data will be available so that we can prepare the financial reports or say financial statements, anything. Okay, this process we call as O2C cycle. O2C. O2C cycle. O2C stands for order to cash. Okay, O2C stands for order to cash cycle. That means process is getting started when we get the order and ending when we get the cash. That's it. When you say like what is the O2 cycle, this is what you have to get ready with this information. But if there is some question exactly which modules are primarily involved in the O2C means you can say OM and ER. That's it. OM and ER only. See here, sales order process starting here with a cash receipt is ending. The remaining process it's all about data sharing, right? So that's what. So you have to explain. Okay, just what is the O2 cycle means you have to explain. O2C stands for order to cash. Okay, the O2 cycle like when we get order from the customer, order management OM department will record as a sales order. Then they'll just check with the stock availability. They'll book the sales order, and when you move the material from sub inventory to staging, that can be tracked as a pick release. When you move the material to customer location, that can be tracked as ship confirmation. Okay, if any returns from customer, that also can be recorded in the OM only as a sales returns. And finally the OM will be sharing ship confirmation details with account receivables department. Based on that, account receivables department will create the sales invoice, and when you get the payment from the customer against the sales invoice, will record the cash receipt. The cash receipt information will be sharing with cash management for bank statement reconciliation. Finally all the data will flow into general ledger to prepare the financial reports or statements. So this we are calling just O2 cycle. The primary key modules are OM and ER. That's all. Okay. So if you understand here this P2P and O2C, just learning this finance won't become challenge. You know the in and out process flow, then where you are working, why you are doing, before that what activity is done, everything it will be easy for us to understand. Okay. Okay, with these P2P and O2C both we'll see in one slide, and then we can wind up the session for today. Okay. So I'll go with this, say this is the inventory. Say we have inventory here. So this is say purchasing, and here say this, let me take here. It's purchasing. Say this is OM. Okay. So this is AP. And here it's going to be ER, and in between we'll have a CM, and we'll have a fixed assets and general ledger. Okay, let's name the same INV inventory. So PO, PO, it's AP, and that's a cash management. This is FA, and that's a OM. This is account receivables CR. And finally this is GL, general ledger application. Okay, now when you talk about P2P cycle, what this inventory department will do, what inventory will do,
Maintain this.
they'll maintain the stock. Just no, as per process, yes, they'll maintain the stock. What they'll do, they'll raise the requisition based on requirement. They'll raise the okay requisition, and they'll get the approvals. Then they'll pass that information to
Purchase.
purchasing. And what purchasing department will do, RFQ. Then they'll receive the quotation, right? They receive quotations
Unless
and analysis. Okay, this will write here. Analysis, they'll
choosing the best.
choose the best one. Then they'll place the PO with approvals.
And afterwards,
They'll record the GRN, right? If required, they'll do the
purchase returns.
purchase returns. That's it. Then finally, they'll be sharing the information with
GR information to AP.
GR information with AP. What AP team will do? They'll create the
Invoice, pricing, purchase invoice.
purchase invoice, and based on that, they'll make the payment. And that purchase invoice information, if that is related to asset, that information AP will be sharing with
Fixed assets.
fixed assets. Here, fixed asset department will maintain the assets based on that information. They'll create the asset based on that information, assets, and then they'll start calculating the depreciation. Then this payment information AP will be sharing with cash management for bank statement reconciliation. Okay, just for bank statement reconciliation purpose. Okay, done. Here, which information will be sharing? AP will be sharing which information? Asset invoice information. Asset invoice information. Just as a background, I am writing that. Okay. Then finally, what happens? AP will be sharing the data with GL. FA will be sharing the data with the GL. CM also will share the data with the GL. Okay. And the same way PO and from all the inventory also data will come. It's like flow only, so that's the reason I'm not representing that. Done. So this is all about P2P cycle. Now when you talk about O2C cycle, here we'll record the we'll record the we'll record the sales order. Then this inventory will have a communication with OM will have a communication with inventory department for confirmation whether the stock is available or not. Then if any possibility to supply, sales OM will book the
Sales order.
they'll book the sales order. Then whenever we move the material from sub inventory to staging, that will be tracked here as a pick release, same as a
Ship confirmation.
ship confirmation. Ship confirmation. Okay. And finally, if any returns from the customer, that can be tracked as a sales returns. When we track the sales returns. Done. So this is job of order management. Then order management will pass the information to
AR.
account receivables. Which information?
Ship confirmation.
Ship confirmation details they'll be sharing. So here, based on that, the account receivables department will create the sales invoice and they'll record the receipt when they get the payment from customer. Receipt or cash receipt, both are same. Okay, done. Now this receipt information will be shared with the cash department, cash management. From now, like just call with the application name, okay? Because already discussed that is done. From now, anything you refer with the application. That too with the short name only. You don't need to talk about accounts payables and all. You can say simply with AP, AR, CMF, or something. Okay. Then finally, all the information. Okay, the receivables department will be sharing with
GL.
GL for what purpose? To prepare the financial reports or financial statements. Anything, statements or reports, both are same. Okay, financial statements, you can say. So this is what we have to understand before we get into our financial application. Okay. So here, which departments or which applications are involved in the two cycles? You see that, just you can. Inventory, cash management, and GL. This is a common in two applications, two cycles. The rest of applications will just are involved in the respective cycle. Done. So now our area is going to be this. This is what we are going to learn. Sorry. Okay, this is what we call as financials section. This area we are going to learn. This only we call as Oracle financials applications. Okay, and this area we call as Oracle supply chain management. We call as Oracle SCM. Okay, SCM stands for supply chain management. So when we are learning financials, we should understand about supply chain management also. The basic knowledge you should have. See here, the PO is communicating with AP. So the basic knowledge you should have on AP. The OM is communicating with, yeah, we should have basic knowledge. And we are going to just have a basic knowledge on PO and OM, and we should know at least little bit about inventory also. And in all these applications, when we are working on the system, we have to work with the reference of employee only. So employees will be created and maintained in Oracle HRMS application. Just make a note, that is not part of this flow and all. Just you can make a separate note. So we have other application called as Oracle HRMS application or HR application, you can say. HRMS means Human Resource Management System. So in this Oracle HRMS application only we can create employees. All employees can be used across all these applications as per business process required. Okay. So this is all about P2P and O2C cycle. Okay. Please take initiative to give the presentations from tomorrow. Not from tomorrow, you can start from today. If you have any other work to, which is very mandatory, you can start from today, where you can start giving the P2P and O2C presentations. Before that, just please go through your note and read all the points and sit and have a discussion with someone Once you feel comfortable, yes, you are able to speak about P2P, O2C without missing some points or confusion, etc., then that is the right time where you can start giving the presentation. Just don't stop with one time presentation. Minimum give 2 to 3 times, then you'll be more comfortable. Okay. Please follow these practices. It's very, very important. Take each and every point whatever you're discussing in the class, then read thoroughly multiple times, and sit and have a discussion with somebody, then give presentation. Done. Nothing else left to do. And once we start with the system, anyway, that also will discuss how to proceed on that. Okay. If any questions on today's session, please. Okay. No questions in the sense, you can just wind up the session for today. Okay. I'll meet tomorrow also same time. Okay. Thank you. See you tomorrow.